wither the euro. Joining us live from Toronto to talk about that is Camilla Sutton. She's the Director of Foreign Exchange at Scotia Capital. She was rated the second best FX forecaster in 2008 and 2009 by Bloomberg magazine. Camilla, thank you so much for joining us. We appreciate it.
My pleasure.
So first of all, let's talk about the euro. We saw it bouncing up off of the lows here. Is this just a pause before it continues to decline, or are we seeing an upswing?
Well, it's a great question, Julie. I don't think anybody knows. The volatility in euro this week has been hair-raising, to say the least. If you look at just where we're ending the week, it certainly doesn't represent where we've been throughout this week. You know, when we look at it, we think really the only real reason you'd want to be buying euros right now is if you are covering off your short, because the underlying aren't strong. The sentiment is still very negative, and all in all, it does appear that we could still see downside in euro as we move into next week. But right now it's Friday, people are moving into the weekend, and certainly in Canada we're moving into a long weekend, and that leaves people trying to cover off their short positions.
Camilla, we've been asking a lot of folks this question over the past several days. Where do you see a floor for the euro?
Well, you know, I think it's a good question. I think when we look at the average where euro's been since inception, it's about 118. When we look at the lows it hit during the financial crisis, that was 123.30. On a valuation basis, we should probably be lower than the financial crisis. I think the valuation has really changed for euro. The appetite of global central banks to use it as a reserve currency has certainly diminished. I think the fundamentals in Europe have shown that they're much weaker than we thought. And on top of that, I think the euro frameworks themselves are far weaker than anybody had guessed. So I think when we put all those pieces together, it does hint that euro should be weaker than certainly it was during the financial crisis. So that brings us certainly below 123.30. I think the average level of euro from inception is really kind of the level to hit. So in terms of where I think we're going over the next month, I bet we get down to the kind of that 118 level. But I don't think we're going to par, as some forecasters have put out there. I think that you know, the truth is the U.S. has a fiscal difficult mess ahead of them as well. And to date, we don't have a fully credible plan. So I think, you know, as we get into 2011, we should hopefully see some stabilization in euro as the market starts to shift back to what's going on in the U.S. and the fundamentals for that currency.
Yeah, but Camilla, I would also guess that there was some positive news coming out of Germany with the parliament there passing that aid package, correct?
That's very true. It was good news to see the aid package go through. However, I think what the market has told us over the last week is that there's an awful lot going on, and there is a lot of things the market's very unhappy with, and I think some of them it's even hard to put our fingers on, but really the growth outlook has certainly been somewhat dampened, and I think that does have some global ramifications. And I do think that, you know, as we look forward for the euro, the ECB still has this mess on their hands of attempting to administer monetary policy over very, very different countries. And that is going to be a very difficult balancing act for them to do without entering into fiscal policy. So, you know, I think as we look ahead, we still see some potential downside for euro, with the exception of the near-term risk of short covering continue, because the market was one way on euro over the last many, many weeks now. And so we are seeing some of those trades come off.
Camilla, there has been some talk in the markets about currency intervention. We had Morgan Stanley putting out a note today saying there is an elevated threat, although not necessarily a certainty that it's going to happen by any means, that the central banks, not only of Europe, but also of the U.S. and Japan, might have some sort of coordinated intervention effort. How likely do you think something like that is?
Well, at this point, it's hard to guess because we've seen all these different things we never would have imagined. However, I think when we look at it, the ECB hasn't intervened since 2000. When we look at where we sit in the euro, the pace of decline is certainly worrying to a lot of people. The volatility in markets has to be worrying the central banks. However, I think all in all, you know, we've seen a faster pace of decline. We saw that during the financial crisis. So I think that the pace of decline is worrying. The volatility is particularly worrying. I don't think the level is that worrying, particularly because a weak euro is actually going to help Europe in terms of its recovery path. Right. So I think all in all, there's an awful lot of concern, but I don't think we're quite at coordinated intervention by global central banks. I think it'd be very, very difficult to justify that right now.
Camilla, we have about 30 seconds left. Taking a look forward, emerging markets, is that where you are seeing growth coming from right now?
It certainly is. The growth in global growth is being driven by emerging markets, particularly China. And as long as that story holds together, even on a bit of a diminished basis, then it still is a good news story for the risk trade over the medium term, certainly not in the very, very near term here.
Camilla, with all of this risk aversion out here, we have seen a sell-off in currencies like the Canadian dollar and the Aussie dollar. But looking at the Canadian dollar specifically, you guys see perhaps some opportunities to buy here?
Well, I think the outlook for the Canadian dollar is fantastic. On a sovereign basis, Canada holds up very, very well. Economic fundamentals are strong. Our central bank is just about to enter a hiking cycle. So we have all these things working in favor. The one exception is risk aversion hurts the Canadian dollar. So I think once we start to see some stabilization in markets, and if this can hold into next week, then it is a good news story for the Canadian dollar once again.
Camilla Sutton, Currency Strategist, Director of FX Strategy at Scotia Capital. Thank you so much for joining us.